let's talk about FBT Zone Setup 3. In FBT Zone Setup 3, we do not trade based on the trend line. Okay, but what is the good thing and bad thing? In FBT Zone Setup 3, you might miss some trade, but stop loss is very minimal, very minimal. How we trade FBT Zone Setup 3? I hope there is no doubt in so as soon as the market comes to our target area, then what we do, it's making lower lows, right? You see lower lows. Then this is the last swing high, right? See, here you see market is breaking the low, right, and protecting the high. This is how the pullback start, right? Here it's breaking this low, this leg breaking this low, this leg breaking this low, this leg breaking this low. So if it has to be an uptrend, I wait for change in market structure at my zone. So here you see it's given a breakout, right? So as soon as it given a breakout, I'm not trading, okay? But because this is a signal of change in market structure, right? There you are entering with your setup 2, but your SL is big. What I'm doing in setup 3, I'm not entering at here. What I'm doing, I'm waiting for market. As soon as here is one thing is confirmed, there is no more downtrend anymore. So market structure is changing. So I draw Fibonacci from here to here, and I wait for market to come to my golden zone. This golden zone, this I had drawn in the very first day when I was explaining about that setup 1. Before that, this I drawn, then I removed that time. So I wait market to come at this area. Either it's not come to this area always. Okay, so what I do, it's up to you. You can put both the lots here in even number of lot, 2, 4, whatever, assuming you are trading with 2 lots, both the lots here or 1 lot here, the same rule, or 1 more lot at 70%. Your stop loss in this scenario, see what was our stop loss in case of trend line, this swing, but here your stop loss will be not this swing, same 95%. And here your target will be not 50% or 0%, your target will be same, this place, right? The trend line one. Means, what is the advantage of this setup? We are entering at this area, minimal price. You see the risk reward. Here is my entry, and my stop loss is this much. You see? And where is my target? This much. Earlier, where I was entering on breakout at this area, where was my SL? This point. And where was my target? Same point. Okay. So earlier my entry was here and my stop loss was here. Okay. So you see my risk reward was 1.92. Here my risk reward is 3.86. Drastic increase in risk reward. But what is the issue with that? You will, okay, one second. You will not get this pullback all the time. What will happen? Market will break out up to some extent. It will take some pullback, in volatility, and you might not get an entry. So that's the reason here you might miss some trade. But when you trade with this setup, this is my only setup which reached an accuracy of 98%. Believe me, 98% once I hit with this in 2-3 months, continuously. Means hardly one SL was gone in the whole month, or 2 SLs, not more than that. That was the accuracy of this setup. But the reason was, when I was trading with this setup, the issue was I was missing some trade. Like here I was not able to enter. So don't mix setup. If you are entering with setup 2, means on trend line break, or let's say you are entering on setup 3 where you are waiting for the pullback, then wait for pullback. It's not taking pullback, then it's breaking out like this, then don't enter here, leave it. So decide which one you are going to trade. So this is setup number 3. Okay, FBT Zone Setup number 3 and FBT Zone Setup number 3. Again, maximum target will be the liquidity. Your minimum target will be the Fibonacci. So your entry will be at zones. Entry equal to golden zones and same that rule which I taught you. Entry will be at the golden zone and stop loss will be 95%. See, this is how on intraday I minimize my SL. SL will be 95% fib level. And this will be your target minimum, this will be your target maximum. And extreme risk reward. What is the beauty of this? Pros, extremely good risk reward. Okay, extremely good risk reward. What is the cons? You might miss some trades. Okay, so if you are some person who is okay to miss some trade, but you are going in very big risk reward, kind of a safe, then this is the setup you are looking for. This is the setup you would be looking for. Okay, so your entry will be at the golden zone and your target will be this level. Okay, so this is one thing you can take snapshot. Okay, so this is what we plan our entry. Now let's come to the example, the same example I would like to show you. Let me go here. This is 1 minute and this is 15 minute. Okay, now the place we took an entry was this. This is my turncoat area. This is my turncoat zone. So price came to my zone. You see, okay, here you see. So price you see is given a breakout from my zone. See, this is my whole zone. From here actually is given a breakout. So you see, okay, market given breakout, then the same trend line approach you would be following here. The same trend line approach like this. You see, this was the trend line approach. So in trend line approach, your entry will be here, right? And your target will be this liquidity area here. So it's easily achieved in this case, right? Easily achieved. But here, what you have to do, you have to wait for a change in structure. So here you see it's going down. This is the internal structure, a pullback. Okay, so this is the last swing which is responsible. Hold down, pullback, came here. 1 second, let me draw it here like this. So you see this is the last leg, right, which broken this swing. You see like this. And now you see what happened. It broken the structure to the upside. As soon as it breaks the structure to the upside, I can draw a Fibonacci and expect it should take, show some sort of pullback. It went here, little bit of pullback happened, not a complete pullback, like so here, up to here it went in one shot. So even I will draw like this, my entry is supposed to be done at this level. And what I see here, I missed the trade. What I see here, I missed a trade. This is a breakout. I'm expecting the market to should come here and I should target the things. But what happened? The Fibonacci, the setup 2 trader get an entry here, and this is the minimum target. This is the minimum target he had achieved. But this trader had missed it. He do not get a chance to trade this. Okay. Now, depending on the trend line, how you drawn, your zones will be drawn. Okay. For example, let me draw here, because here, some market due to the volatility, right? Here is two different possible trend line. So you see, this is also one trend line which is possible here. Okay. Okay. So market again, some people who trade on setup 2, their entry will be here, stop loss will be this swing, and you see again that is a very good risk reward. Very good risk reward. Very good risk reward. 1:4, 5, right? Kind of risk reward. But now here you have to see, when the market coming in the zone, it have to always make the structure like this. It's have to go up, break the structure, out of the zone, and then when the structure is break, you draw the Fibonacci. So you see the structure is broken right here. You see it was a downtrend here. Then the market broken the structure up, but didn't came back. So in the trend line scenario, setup 2 scenario, you are going to get the trade in both trend lines, but you are not getting trade here in any ways. You are not getting the trade. So that's the reason, you will not get trade all the time. But whenever you get a trade, that will be a great trade. I will show you some more example. One second. See this example. This is a recent example. Here you can see market came to the turncoat zone in 1 minute, and let's draw the market structure in this case. So here you can see the market was broken. First you see how it was. It was breaking the structure to the upside, like came here, taken a pullback, then it broken the structure to the upside, then suddenly a downside structure break, then suddenly an upside structure break. So whatever is internally, we don't care, right? As soon as it break the structure to the downside, then only it matter for us. And here you see it's coming like this, internal structure taking pullback, internal structure taking pullback, and broken the structure to the downside. Okay. So here you see this is the last swing, it broken the structure to the downside, and then suddenly you see it's broken the structure to the upside also, right? So overall the structure is broken to the upside at this point, right? Now structure is broken to the upside, we are going to draw the Fibonacci, which I was drawing in the beginning. And here you can draw your zones. So you are not going to break out. Also here you see the trend line is satisfying. Wherever the setup 2 is there, 3 will also be there. Means 3 is a subset of setup 2. So setup 2 is saying buy here, but setup 2 says don't buy there. Wait for this leg to show some sort of pullback. Okay, so here is the pullback. Setup 1 guy will buy here and put the stop loss here. Okay, and you see the reward will be up to here. It's not good risk reward, right? It's not even 1:1. But here set of setup 2. So setup 2 is saying buy here, but setup 2 says don't buy there. Wait for this leg to show some sort of pullback. Okay, so here is the pullback. Setup 1 guy will buy here and put the stop loss here. Okay, and you see the reward will be up to here. It's not good risk reward, right? It's not even 1:1. But here, and we can trail, as we do not have any higher liquidity, so we can trail it. Okay, so we easily, whenever you trail here, and we can easily get, like, for example, how to trail it in this scenario. Went up, pull back, went up, pull back, went up, and here is a breakdown of structure. So till here we were able to book. So 1:2, it's a good risk reward. So this is the one thing. Okay, there would be many places this kind of scenario occur, but the thing is, what is the difference in 2 and 3? 2 you buy immediately, 3 we wait for a pullback to buy. So here is one more example. You see, this is our turncoat area. I'm just trying to show you the solution from the same example, with the setup number 3. So here you see we given a breakdown like this. We given a breakdown. Then we are coming to the area. Okay. So what this logic says, draw the trend line. We had drawn the trend line, and as soon as the trend line is broken, right, we have to wait for a pullback to this area, and you see it never came to this area, and it was continuously going down. So here is the beauty of setup 2. Setup 2 is an average setup which gives an average stop loss, and most of the time you will get an entry. Setup 1 gives very big targets, big targets. Okay, and stop losses are also protected, it's not hit easily. Setup 3, very small stop loss, big risk reward, but you see we missed the entry at this place on this. But you see what happened. Let's see, when again the market came to this area, you see, and here, if I can draw a trend line, let's say like this. Okay, and let's see if this time also we get an entry or not. So here you see we given a breakdown to the downside. We were expecting some sort of pullback. Okay, and you see we are getting a pullback at this level. Okay, we are not supposed to get pullback at this level, because the pullback strategy we are following to minimize our stop losses, right? My point is, what is the point of taking a pullback entry at this level if you can easily take on setup 2 at this level, right? So if I can draw like this and then it's coming to this area, then you will get an advantage. Okay, then you will get an advantage of setup 3. So here you see, based on the setup 3, we again do not get any entry at this point. Okay, so because this is, a normal entry in the setup 2 is here, so setup 3 entry will be somewhere above this, and we again do not get any entry based on the setup 3. And setup 1, when we entered it, like taken like this and came back, kind of oscillated. So in intraday we might be exiting. Let's see again setup 3 if we can, trade or not. So here you see, if I can draw a trend line like this, it given a breakout, and it's clear it's went down. Okay, so if we draw Fibonacci from here to here, doesn't make any sense. If we draw from here to here, then this area, Fibonacci area, will come like this. Okay, to this same area where you are already getting the entry based on the setup 2. So your here at this point. Okay, and here you see this is a trend line break. This is again based on the setup 2, and if you can draw the Fibonacci from here to here, then this is a area where you can get an entry. But you see the next day what happened. Okay, before next day, leave about the next day. This is making the setup near here. You see it's a breakdown, and then here we will plan our trade on pullback, and your stop loss will be here. So before closing the market we got some profit. Okay, we got some profit here, no doubt. From here to here, how much? Almost 62 points, which is nothing. Okay, no momentum, right? So even 3 after 3 p.m. if it's setup also is not recommended. Okay, so not a great one, but yes, this is also one place we can think of, and if you draw this as a trend line, okay, then here is also an entry on next day. And if I draw Fibonacci, again we do not get any entry. Okay, then before getting an entry already it cleared all the targets, right? So that's the thing in setup 2 and setup 3. Setup 3 you will miss trades. Why? Because sometime in volatility in bank nifty you will not able to get entry in the pullback. But in setup 2, which is the moderate setup, you will get an entry most of the time. It's put a moderate stop loss and you will able to enter. So I hope setup 3 is bit clearer to you, like how it works. I just plan when it gives a breakout, I immediately not enter. I wait for some sort of pullback on this leg. Like if this is the leg like this at that time, let's say up to here it break down, then I want it should go above this. Means my entry price will be better entry price than setup 2. Setup 2 giving me entry here, then I want somewhere to sell at these levels. Okay, that's what we want in setup 2. Setup 3, that's we want in setup 3. So setup 3 will not going to work always. As I told, you will miss stop loss, you will miss some trades, and stop losses is very very small. But setup 2 is great. Stop losses are average, and you will make a lot on setup 2. Sometime in volatility your stop losses will go here, but majority of the time it will go immediately. You will enter and you see the boom. You will always target the next liquidity open price. You see here is an entry, and you see this is a target. Extreme risk to reward, extreme risk to reward at these points, right? You see 1:8, right? So this is the beauty, right, of setup 2 and setup 3. So yeah, I hope guys you are clear with setup 3 now. Okay, and I think it's okay to conclude the session over here. I think so. For example, let me show you this example. You see this, right? So if you buy on breakout, right, you see market, sorry, not this, just go to 1 minute chart of same 28 March 28. Okay, here you go. So here you see those who are a trend line, those who will enter at this level on breakout, their entry will be at this level. Okay, and those who are like somewhere here you will be buying. Okay, and those who are simply going to draw the Fibonacci, you see they got a beautiful entry at this level. This level stop losses is here 95%. Before hitting the stop losses, you see we cleared all the targets. Extreme risk to reward. Okay, so breakout trader, so you see this place you got an entry. Now if you can based on this setup 1 2 3, you can create your own strategy also, some mix up of this something if you want. Okay, So here breakout trader will buy somewhere here, like on this price. Stop loss will be here. So setup 2 will give you this, but in setup 3, the beauty is I am entering here, my stop loss is here, and my target is here. You see, 1:3, easy risk reward, right, in my favor. And you see, I got very good risk reward, right? And then again it came to the zone. Again it came to the zone. You can draw trend line like this. Breakout trader can take an entry on this, maybe in this candle, something like that. And Fibonacci trader will draw Fibonacci from here to here, and their entry will be not on breakout, rather than pullback or retest of the breakout. Here will be my entry. You see, stop losses will be up to here and target will be up to, at this trend line or the next liquidity as a max target. 1:7, 33 point stop loss in option, 10 point stop loss, and 274 means minimum 150 point target in options. You see, that's the beauty of setup 3. You will not get all the time, but when you get, you will get good risk reward. So I hope you are clear. I given a lot of examples which was possible here. Okay, try out some more examples, share with me your ideas. Okay, you can message me, whatever, just share with me. You can write support@priceactionmonk.com. You can write, and can validate in case you want. But you see the beauty, I do not want to pay, the logic is I do not want to pay the expensive price, I want to pay a best price when I'm entering. That's the overall logic behind all the setups. I do not want to give unnecessary stop loss. That's the logic behind the setup 1. Setup 2, I want to enter at the maximum possibilities. Setup 3, I want to enter, but I do not want to give big stop losses. Minimum stop loss with a maximum risk to reward. So I hope you got an idea how it works. So thank you so much for listening. If you really like the content, and because I really make money in this setups every time when it occurs on the chart. And if you are also making it after going through the setups and feeling it's useful, don't hesitate to put 5-star and give your reviews, because it helped me to reach out to the more candidate across the India who really need it, who do not have money. So please support us to help more people like you, and those who do not have the enough money to learn the bank nifty, and those who want actually. Okay, so yeah, that's all about today, guys. Thank you so much for listening. Bye bye.